So we're going to skip the intro of this video because today is a total shit show. We're up, we're down, the markets are crashing again. Let's talk about what the hell is going on today, because what the report actually said from the Fed was not all too bad, and there was actually a change of the statement, guys. So let's get into it. Hit that like button and subscribe to the channel if you guys have not already. First things first, this is the report that comes out at 2 p.m. This is what initially sent the markets up very, very aggressively. It sent the markets up, let's just say, from the lows of the day to right there. That was a 1.72% move to the upside. And even after that, the markets went back and forth grappling with this, but it was seen as a bullish thing until Fed Powell opened his gullet. Let's go ahead and look at this actual report, and keep in mind this report stays the same every time they report it. It usually stays the exact same, but they'll change something here or there, but by and large the report does stay the same. So people look for this report to say, hey, what's different? And the biggest thing that was different that caused the markets to move up in a big way is right here. It says, in determining the pace of future increases in the target range, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. Now, what does that mean? That means that the Fed is saying, hey, we have tightened very aggressively so far. There's probably going to be some lagging effects to all this tightening, right? 3-6 months down the line, I'm sure there's going to be less loans being put out there. I'm sure there's going to be more unemployed people. Just if the Fed stopped raising right now, those would be the lag effects of what they have already done. So the Fed was acknowledging that. The Fed in this report right here threw the markets a bone that, hey, maybe it's appropriate to slow down the pace of rate increases. And that was very good until Fed Powell opened his gullet. And what he said and what came out of his gullet was not the opposite of that, but very different from what this report says. Essentially, he said that there is going to be lags, but they're not worried about it. That essentially, if the data continues to come in very, very bad, well, they're not going to slow down the pace of rate increases. On the other hand, if data starts to come in and support that they should slow down the pace, that's what they're going to do. But he also said that that terminal rate is going to have to go much higher. But maybe it's not quite to the rate of inflation, which historically, if inflation's 8%, you got to get the federal funds rate up to 8%, if not higher than 8% to stamp out inflation. He said maybe we don't have to go that aggressive, but if we were to do a new summary of economic growth projections, right now, the terminal rate would look higher than what it did last time. And that's what really started to freak out the markets. And as of right now, the markets are pricing in still a 50 basis point rate hike coming in December, with a 61.5% probability of a 50 basis point rate hike. So this completely flipped today based off of that summary, but it's a mix of the rates will have to, continue to go higher for longer, and they're going to have to go probably way higher than some people expected. Maybe 5-6% is where we're going to have to get rates, and then to hold the rates at those levels. Basically, he didn't have anything bullish to say or positive to say in the actual remarks that he said. But this is going to make data points hold a lot more weight in the market's eyes. And we do have some data points coming this week that will potentially cause a very volatile market reaction. Now, the last thing that is important that I do want to point out from the actual press conference was the last question of the press conference. So if you guys want to go listen to this yourselves, I jotted down exactly what was said because he answered it very interesting. And essentially he was asked, do you think the window to have a soft landing has narrowed? And his flat out answer was yes. Just bluntly, yes. He says nobody knows if we will have a recession or if we will have a soft landing or how deep or how long a recession could last if that becomes the outlook. And essentially what he's saying there is the Fed has no goddamn clue what is going to happen, but they do place more weight on a potential recession coming in the future. And that is what is killing the markets today as well. As you guys can see, markets continue to flush down. S&P 500 at the time of recording this video down over 2%. Now, I don't think this is necessarily what the Fed wanted to cause, but the lack of clarity on the conference call about what to expect in December is definitely going to cause this. Now, if you guys look too, the volume is super high right now. The 1 minute candles are pretty much all excess of 250,000 for volume. On the S&P 500, that's very large. Some of these candles are over 1 million shares that are trading hands. So I do expect the rest of this week to be very, 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 very volatile, to say the least. Big up moves, big down moves, not off the table. And especially after seeing a big down move today like we are seeing, it also would not surprise me to see a big up move coming tomorrow. That tends to happen. If the day of the Fed you get a big up move, you tend to get a big down move the day after, or vice versa. So that's really what was said by the Fed. All in all, my kind of analysis on this is probably the Fed will be slowing down in December, as long as the data points can somewhat support the Fed slowing down. But as of right now, as far as the markets are reacting, people really don't care. People are looking to say, hey, 5 to 6% terminal rate, that's not a good thing. This is not a good thing at all. So we're going to sell off stocks. And we're really at the mercy of what these algorithms and very large hedge funds want to do with their positioning. And as it looks right now, it's not so good. So my personal, like I said, commentary on this is that we could still get a rally. But today you definitely are going to get a lot of negative emotions and feelings, potentially tomorrow as well, potentially throughout the rest of this week, or at least until we get one good data point. And once you do get a good data point, that's where things could really flip, and they could flip very quickly. So for tomorrow, as far as the economic data, you have the balance of trade at 8:30 in the morning. It's not going to matter. You have the ISM non-manufacturing PMI for October. That's not going to matter as much. It will be important to some degree. That comes out at 10 o'clock in the morning, but it's not going to be a huge deal. On Friday, you have the non-farm payrolls for October and the unemployment rate for October as well. Those data points coming out at 8:30 in the morning. And the previous non-farm payrolls for September was 263,000. We are expecting 200,000. So we are expecting to drop about 63,000 jobs, and we are expecting the unemployment rate to go from a previous 3.5% to 3.6% at this next reading. So if we see an unemployment rate that goes down, or we see more jobs created, that's going to be a double whammy of negativity coming on Friday, and I would expect to see a big move down in the markets. If you do see jobs coming in less than 200,000, or the unemployment rate going higher than 3.6%, I would expect that to be a very, very bullish thing for the markets. But like I said, guys, the markets right now, they're still expecting a 50 basis point rate hike in December, at least for right now. And this is the one thing that I would really watch heading into tomorrow is, do the markets latch on to this? Do the markets latch on to the federal funds rate projections, right, of this 50 basis point rate hike in December? Does that have a way to cause a bullish reaction? If it does not, well, we are in for some serious shit. If it does, that could mean a pretty big bounce coming over the next couple of days, because after all, we've dropped the last couple of days heading into this Fed meeting, And as of right now, you are very low on the S&P 500. There is no credit at all towards just anything bullish ever. Like the market price action is absolutely pathetic over the last couple of days, even heading into this Fed meeting. And now after this drop, you're going to be getting close to lows of 2022. You're not going to be far off, maybe 1 or 2 bad days off of fresh new lows. So there is all of that, guys. Let's go ahead and take a look at TLT. This is the bonds, and the bonds are going down yet again today, meaning yields are going up. TLT down 0.66%, not a good thing. And the dollar is up 0.33%. Off the initial report from the Fed, the dollar dropped a lot. Bonds shot up a lot, and that was bullish because it means yields were going down, and the dollar, the conversion rates for companies got a little bit better because, you know, global investors were expecting the Fed to raise rates less. And we still are, but as of right now, the dollar is going back up. The bonds are going back down. That is a very, very negative thing, and this is really playing into this market drop that we are seeing here today. Now, let's go ahead and pull up good old AMC stock. And let's take a look at what's going on today, because we are down about 5.5%. Let's go ahead and pull it up. And we are, yes, dare do I say it, approaching the lows of 2022 yet again. Currently at $5.81 per share. The RSI signaling severely oversold, and the MACD is still slightly bullish. But I imagine by tomorrow that is going to be in very bearish territory. So it wouldn't surprise me to see a big bounce tomorrow. It wouldn't surprise me to see a lot of risk on stocks do well if the markets can actually latch on to the change in the actual statement, not as much in the verbiage of Fed Jerome Powell. And that's really a toss-up at this point. I would be pretty surprised, though, if we do see another, call it 2% down move tomorrow, because, you know, the actual data here, what the markets are pricing in, kind of bullish. Can't lie. We're expecting a smaller rate hike in December, but Fed Powell did not save the day, guys. So as far as the Ortex data, you can see as far as the option activity, we have seen 4 orders totaling $404,000, positive order value of 10%. So not good at all. As far as the live short interest, you're looking at about 19.5% short interest. The amount of shares currently sold short sitting at 100.92 million. The cost to borrow max at 25.21%, and the cost to borrow average at 18.45%, guys. So there is all of that. As far as earnings that we do have over the next really couple of days, the rest of this week, we'll go ahead and pull it up here. We have today and after hours: Roku, Qualcomm, Marathon Oil, Robinhood, Etsy, APA Corporation, LB Marley, I don't even know how to say that one, Lumen, Fortinet, Western Midstream Partners. Tomorrow pre-market, you have Royal Caribbean Group, Cheshire, ConocoPhillips, Moderna, Crocs, Peabody, Datadog, Peloton, Nikola. That's a weird one, seeing that one still. Penn National Gaming. In after hours tomorrow, you have PayPal, Coinbase, Block, Mercado Libre, Warner Brothers Discovery, Twilio, Starbucks, Carvana, Cloudflare, Stem. And Friday before open, you have Fubo, DraftKings, Petrobras, ACM Research, EOG Resources, Dominion Energy, Duke Energy, Enbridge, Cinmark, and Hershey's. In particular to AMC, obviously watch Cinmark earnings. You can see a sympathy move with AMC based off of what they do report. But the big ones in after hours I want to watch: Roku, Qualcomm, Robinhood, and Etsy. Those are going to be potentially the big movers. Potentially, you know, these are stocks that could really drop a lot or potentially run a lot depending on what is said here in after hours. And these market conditions are going to be very unforgiving for companies that miss their earnings, guys. So that is going to be it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. This is the most important video for you guys to actually source your comments, questions, or concerns down below, because I want to know how you guys are feeling after this report. You got a little bit of good, a lot of bit of bad out of Fed Jerome Powell. What does that ultimately mean for the markets going ahead over the next couple of days? I want your feedback. Nonetheless, if you guys want to come trade with me live in real time, see my Etsy trade that I just put on, link down below in the description of this video. Thank you guys for watching, and I will see you in the next one.